This is Wednesday, the 21st of July, 2021. It's 8:02 a.m. Chicago time. This is episode number 2038. Thanks for joining us. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Let's hop right into the Convergent pre-market summary sheet. Overall, the market risk posture is mild risk on today. We have the Nasdaq lagging a little bit. NFLX announced yesterday and caused a minor move. But overall, the market continues to hold above yesterday's settle prices for the indices. And you'll notice that the bonds are down 30 ticks. The notes are down a little bit as well as the euro bond. So allocation out of fixed income into equities. It looks like this morning, crude oil catching a little bump. Crude sold off on the close yesterday after putting in a V bottom earlier in the session, and today is running up a little bit. So that's where we stand. Just a quick check. I'm getting notices that there may be an issue with the feed. Are you having issues with the feed? Can you hear me? Can you give me a quick check, please? Anyway, the volume so far in the S&P. The volume so far in the S&P 240,000, which is above the mode. The mode for the last 252 days, and that's a rolling 252-day period. The mode is 190,000. That's what we expect coming into the session. We have 240,000, so pretty decent activity so far and pretty decent interest. And then the range is actually decent again today as it was yesterday. Yesterday was around 25 points or so. Point of control of 43.22. If you recall, last week's low was 43.14. And last week's close on Friday or settlement on Friday was 43.18.5. So we are basically where we were last Friday. We built a nice high volume node in this area. Bitcoin dropped through the 30,000 and has popped right back over. Some volume going across there. Ether futures as well. And that's where the overall market stands. What's important to the market today? Of course, we had Coca-Cola, Verizon, Baker Hughes, and others, J&J, and announcing pre-market. Most of those surprised to the upside, except for Baker Hughes, which came up short. Baker Hughes was expected at 16 cents, came in at 10 cents. They had a higher revenue number, and the rest actually surprised. CMA, Comerica, surprised by 45%. Coca-Cola surprised by 23%. Anthem surprised by 11%. So pretty decent earnings this morning. The earnings will continue. COVID case increases globally. This is the source of some nervousness for the market. And then, of course, the U.S. infrastructure bill goes back to the Senate, and the market is looking for what's going to happen with that. And then now coming on to the scene is the U.S. debt ceiling. That's going to start to come around, and that's always an issue. The market sometimes ignores it, sometimes it does not. I'm suspecting that this time it will ignore it. It's just noise. There's so much money flooding the markets right now that it's tough to make a case for worrying about debt. What's on deck for today? Just the 1030 crude oil stocks from the EIA and gasoline. At 10:30 a.m. today. For those of you trading crude, you want to pay attention to that. So that's where we stand. Let's take a look at what's expected for what was expected for yesterday. Actually, let me hop back to this screen and show you that. Yesterday, remember I said that I don't know if it'll pull back lower, if it'll push lower and get through that low volume node colored in pink here, this area. But if it does, I'm looking for it to pull back as far as 50, not 250, but it might pull back to as far as 50, and I'm looking to get long. I'm looking to get long on the first scenario into 87, and then ultimately, which is the MC point of control up here, ultimately I would be aiming, if we push as far as 50, I would be aiming for 93. Now, I got a message yesterday, and they're like, you're missing the, and this may be a new trader, and I don't mean to make fun of it, but the message was, hey, I've been watching your Trader Bites for a long time, and you just seem to consistently miss calling out the high or the low. And I'm actually tickled by the innocence of that statement, but I'm working, just so everybody knows what I'm projecting, what the expected extended target is, in this case 93, as pointed out over here, expecting it to kind of push to 93 and pull over. This is not resistance. This is not supposed to be a short setup into the close. I cannot project what the high will be. I do get it right sometimes, but you know what? It's not because I'm a superstar. It's not because I have some special expensive software or some sort of an algo. It's because of randomness. I cannot take credit for that. Sometimes we call the low and the high to the tick. That's happened many times in the last 2,037 episodes. But that is pure randomness. That's how randomness works. So how do I figure 93 is probably the area that is likely to get topped out or see resistance? It is because I'm using daily statistics, daily range statistics. And from 50, if I'm saying it might pull back as far as 50, projecting up, I'm looking for about 40 points, actually 44 points of range, and it happens to coincide with the 93 mid of the gap. 93 mid of the gap, and so I have to tell myself that would be the extended target. Once it gets up there, this is an area I do not want to fight. And then sometimes the market comes up way short because it's well within the first standard deviation. And sometimes markets exceed it. And so in this case, they've exceeded it. Here's how it looks. So the goal with the mapping that I do in the morning, the plan that I do in the morning is not to be a predictor of the future. I'll leave that to Jim Cramer and whoever else is selling advertising space to predict what the market is going to do. I mean, nobody's good enough to predict what the future will have. But this is right here is where the 93 area was, and you could see it pulled back just a tad, but not much. 7 points, 7-point pullback, and we didn't even get done with the initial balance at that point. So I'm projecting, this 44 point range for the day, and the market got it done within the first hour. This is a market you don't want to fade. So you can also, the other thing is gauge the distance you have to your VWAP and mid. And if it's increasing, this is not a market you would want to short either. You could see that this is really widening out, kind of a megaphone formation. This shows strength, that the market's staying well ahead. And so what do I care? I don't care. I'm projecting 93. We saw a setup at 4,300, looking to buy the pullback to 4,300. We saw some excellent, in my opinion, and I know I'm saying this while others may have lost money yesterday. We saw some excellent rotational plays yesterday. Plays yesterday. We saw some excellent order flow plays yesterday. I narrated these in the Head Trader channel of Convergent Trading. I try to point out what the market is doing and how things are setting up and what the setups are, but that's not the purpose of that channel. But when it's so clear and vivid, it's easy to do that. We finished yesterday with a local weak high. It looks incomplete on the buy side yesterday, and we ended up, of course, pushing that overnight high. We had what amounted to a trend day up. Again, the point of control in the upper quartile of the range, expanded range, excellent volume, multiple high volume nodes throughout the profile, thin profile below, yada, 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 leaving singles. These are all indications, excuse me, these are all indications that that the market was in a trend, and with the point of control closing near highs and the market closing near highs, what that says very simply is that the auction is not complete. It hasn't really found its sellers. You want to see when an auction is complete, you would have to look at the Nasdaq this morning. This is what it looks like. See that tweezer top there? Some people call that a tweezer top. This is what it would look like. You reach a price where you entice sellers to step in and just squish those prices down. Why? Because they are considered advantageous to the seller. Who is the seller? It may be someone who is long from 14,400 or something. It doesn't matter. But the fact is they flipped into a seller. It could be a new seller coming in. In either case, they're seeing an advantage to selling these high prices. This is what a secure top might look like. It's not perfect, but a secure top looks like this. The market just runs away from that top real quick. We're seeing that in the Nasdaq this morning. Contrast that with the way the S&P closed yesterday in this 4-tick Renko chart, and you'll see that it's balancing out and topping over. Some people look at this as a rounded top and so on. It's not really a rounded top if it continues to push higher, and to me, it looks like we didn't find the sellers, and if we didn't find the sellers, we're likely to continue higher into the overnight session. Again, we generated a couple of single prints, 3 single print areas yesterday. One thing to note, as it's climbing and pushing away from the open, remember the open was at 61.25, which represents a 0 delta. Despite the fact from 61.25 we went to 43.30, basically 43.30. That's a 70-point push. And remember, I was projecting about 44 points yesterday, 43 points for the high. It's got the day range or the day range stat stretched, but look at the delta. The delta finished up on the sell side at the top. This was weakening at the top, but I didn't see anything that would cause me to believe that we are done to the upside. So let's move on to what it did overnight. Overnight, here it is, another attack at that high, and then you get some selling, but it ends up holding the low. Now, the catch with the overnight is that the low is actually quite poor as well. So we ended up with a weakish high yesterday, and we ended up also with a poor low in the overnight session. But once the Europeans came in, which happened right in here, there was a strong push, a little pullback to yesterday's high, continuation of 38.50. So we ended up pushing far enough to find those sellers. And now, where are we? We're right in the middle of the range. We're against the mid. We're against the VWAP. We're against the overnight point of control, 43.22 to 43.25. Crowded area right now. And we're holding steady. The Nasdaq is heavy, as I said. Nasdaq's coming in heavy, and the delta is flat. Settlement is just below us at 43.15. We're trading at 26. And remember, again, between 22 and 25, we have a crowded area, and it's really struggling. If you look at the order flow, look at how it's trading around the VWAP and the mid. Look at how wide these areas are. This is a battle going on here. You see that? Nice little battle going on here. This is likely to become the over-under line for the session. Not for the session, but for the start of the session. So this is how we're coming in today. So very interesting plays coming into today's session. And of course, we have taken back pretty much the entire sell-off, as we often do. Let me pull up the composite here. Where is my composite? There you go. How you doing, buddy? Look at this composite. This was the selling day. This was yesterday. It bridged the gap. We bridged the gap from the selling, the Delta variant, selling, whatever the reason is. We don't care about the why when we day trade. And we built a nice little bridge yesterday to gap us, to bring us back into where we finished on Friday. Remember Friday, we finished in this area that we're trading in right now. That's what we closed the week at last week. That number precisely is 43.18, just below it. So the question is, does it continue higher today? And if it does, 43.71 even becomes a key area. 43.71 even becomes the key target above, and the shorts are screwed. If we fall back out of last week's range, if we get below 43.14 and a quarter today, it is going to push. It is likely to push through the really thinly traded areas down below, and there's a little bit of room for a sell-off. So I know it sounds like I'm kind of hedging my bets and I'm speaking from both sides of my mouth, but that's not the thing. It's an if then else kind of scenario that we have to work with as traders. So if we look at this again, here's where we finished Friday. Look at this right there. Friday's close right down here. That's the 18. Let me draw you a map. And I'm not saying that in a rude way. 18, 14 low, 18 close. And then we get yesterday's high, which coincides with this low volume node, pushes us into what? Pushes us into this highly contested area. What does that translate to? That's today's high. You see how the structure is working, how the whole thing, it's a jigsaw puzzle that kind of the pieces start to fit together. There is a logic to the auction. There's a logic to what the market is doing, because the higher time frame participants are using major milestones to figure out what areas present an advantageous risk versus return segment or zone. And so this morning we pushed into this area and we rejected this area to pull back. So if we take out the overnight high, then we are likely to find ourselves on the other side of that high volume node on Friday, and that'll be 43.50. So if we push through this 43.50, this zipper, this big area, this consolidation area, the point of control of Friday, this becomes a key test area. If we push to the other side of it, then 43.71 becomes our target. We want to hold on to a long as best as we can into that area. That's quite a ways from where we are now, but we can cover 50 points in no time. So that's where we stand. And then, as I was saying, if it gives up, if it gives up the low of last week, if it gives up the low of last week, then what does it have to hold it from yesterday? Look at this thin volume, poor structure below us, and it's likely to turn over and push real quick to 4,300. And then if it doesn't hold 4,300, now we're going back to where? 4287, 4287. Okay, this is your map. I might as well end the broadcast right here because that's pretty much laying out what we're looking for. So we're in a very interesting spot here. Do we go and take the overnight high? If we do not, then we are looking at chop in the middle against yesterday's high volume area, which is right here in the 43.15, which is the settle price from yesterday. If we give that up and we take out the overnight low, you got to hold on to that trade. In my opinion, trade your plan. I would be holding on to that trade into the 4,300 and keep a runner on for 42.87 or scale back in on a pullback to 42.87. That's the map for today. So let's take a quick look at what we've got in terms of order flow and what's sitting out there. And I'm going to tell you that there isn't much. I've filtered out everything but the thicker area, relative thick area in the visible range. And there's just little crumbs all over the book right now, and it seems that way until you get to 43.20. Pretty decent defense area here. You can see that this has been here a while. 43.20, and then below there 43.10. These are major strikes. Strikes for options and futures are 10 points apart in the S&P, but here this one is coinciding with the overnight low. This area traded, look at how much it traded, 12.27, pretty weak low. It traded and traded and traded, so there's some sort of an iceberg or something going on down there, and that's really important to keep track of. 43.20, 43.10 in the order flow. Other than that, let's just move right into what's expected for today, which I kind of laid out to you already, and I'm running out of time. Again, here's the map. Here's what we're looking for today. Boom. All right. So, very important right here. This high that we put in overnight coincides with this area from last Friday. This is the template area, or the last time we auctioned. These lines are not perfectly straight, but you can see that this area here, we're expecting a big battle. So keep an eye, pay attention if it pushes through the overnight high that we put in. So it basically nibbled into this high volume area here. It nibbled into this high volume area and fell right back off. If we push through, then it is likely to see a battle or a fight on the way up. We're expecting to see nice wide footprints in that area. We're expecting a fight there. We're expecting chop. Be careful once we take the overnight high. But if we get to the other side of it, which is around the 43.50, so the 50 right up here, if we can get up into the 43.50, the pullback now gets a lot of support. The pullback, as it pulls back, we're going to have a lot behind us to support along, in my opinion, because of how thick this area is. I expect a fight there. I expect a bunch of zippers that we can lean against, looking for along into, what is it? 43.71 is the next key figure above, 43.71. So what are we looking for today? Open auction. I'm looking for this to make an attempt higher. I'm looking for it to fail to do so, pull back to the overnight point of control, and then push into the 42.10. Fight the 43.10. And we've got a lot of order flow, a lot of bids sitting down there, but it's a weak low. And then I'm looking for it to pull back a little bit before it bounces back up. So we're looking for a higher high, higher low, but really a resting day today. I don't see a catalyst in the market to push this thing through, but if there were, this is the map or the plan or the scenario for that. Open auction, pulls back, gets into potentially the overnight point of control, 43.22, and then we have any order flow as I showed you a minute ago at 43.20, and boom, we get the explosion higher, and then we look for a battle here, a tough battle into this area, clear the 50, and once we clear the 50, we're looking for 71 as the key target above. So we're looking for it to run to 71. That's the second scenario. Again, this is not what we want the market to do. This is how we're going to respond, and we're mapping out the key areas to play with and deal with and manage as the market pushes into the next area. We're coming in with a plan, and that's the most important thing you can do as a trader. Come in with a plan and have risk defined for that plan and let the market do as it does. At the end of the day, it's a random thing. Sorry this took so long, but there's a lot going on here structurally, and I feel like you just need to keep track of the narrative. It's cool to scalp using indicators. That's awesome. That works for a lot of people, and I definitely condone that, but come in with a map so you can hold on to those trades once you take them. Good luck.